My name is Jeremy, and I'll be presenting my stock comparison analysis between Iberdrola and Orsted using the HOLT Lens platform. I'll start by discussing the relative wealth analysis generated by HOLT Lens. Starting with Iberdrola, as you can see on the economic returns chart, prior to 2020, Iberdrola had a CFROI lower than its cost of capital. However, the market was pretty accepting, and this could be a sign that the market perceived Iberdrola as a long-term growth investment. A second observation is that the market appreciates when Iberdrola invests for growth, notably in 2019 when it started aggressively acquiring renewable energy companies. Thirdly, you can see sales growth trends almost similarly to asset growth, which is a good sign of asset use. And lastly, on margins, you can see Iberdrola margins are rather consistent, and more importantly, it is on an improving trend since 2013. As of 15th of April, HOLT predicts for Iberdrola a 2% upside. Next, we look at Orsted. In 2017, Orsted completed its transition to renewable energy after selling off its oil and gas business, and the market was clearly in favor of this. However, the market is also sensitive to Orsted earnings fluctuation, and this is evident in 2021 when Orsted's CFROI dipped below its cost of capital. On Orsted's sales growth, you can see it is rather volatile, and this is largely due to fluctuation in gas and power pricing. On Orsted's margins, you can also see they are rather inconsistent, and it is due to various reasons. As of 15th of April, HOLT predicts for Orsted a 5% upside. As you can see, HOLT's prediction for both stocks are pretty washed. So next, I use HOLT Flex Valuation to further test the models for both companies. Starting with Iberdrola, I loaded the IBES scenario, and it returned a 24% upside in which it assumes a modest sales growth of 3 to 5% and an EBITDA margin of 31 to 33%. Now, to better understand the basis for HOLT prediction, I further stress tested the IBES model by decreasing the EBITDA margin, and I found out that in order to meet HOLT's prediction, EBITDA margin needs to go down as low as 28%. For Orsted, there is no IBES scenario, hence I did my own flex valuation. I inputted sales growth of 9% in 2022, descending to 5% in 2026, and I also applied a fixed EBITDA margin of 26%. Interestingly, the flex valuation returned a 24% downside. So I further increased the sales growth input, and it seems like, in order to meet HOLT's prediction, sales growth needs to be at 30% in 2022. So to conclude my analysis, my recommendation is to buy Iberdrola stock, for the reasons being Iberdrola has more growth potential, consistent and improving margin, and above all, Iberdrola has a much fairer market price today compared to Orsted. The HOLT Flex valuation helped us understand the key value levers for both stocks, and in the case of Iberdrola, the EBITDA margin target is much more attainable considering its strong past performance. Thank you for your attention.